All right, let's get right into it. Something big is happening in the world of digital assets. I mean, a really fundamental shift is underway in how we think about, value, and even use cryptocurrencies. And today we're going to draw a whole new map to make sense of it all. It all kicks off with a bit of a mystery. ARK Invest, a name you've definitely heard, led by the super bullish Cathie Wood. They're one of the most watched voices out there. So when they abruptly changed their forecast, yeah, everyone's ears perked up. So what was the deal? They dropped their 2030 bull case for Bitcoin by a massive $300,000. But here's the thing. It wasn't because they'd lost faith in Bitcoin. No, the reason they gave is actually way more fascinating, and it tells us everything we need to know about where this whole space is heading. And the core idea comes down to this term right here, role usurpation. The best way to think about it is like a job opening. For years, everyone just assumed Bitcoin was hired to be our new digital cash. But then another candidate walked in that was just better suited for that specific role. And that new candidate? Stablecoins. By 2024 and 2025, the data was just undeniable. Especially in emerging markets, where crypto adoption is really taking off, this crystal clear pattern emerged. People were using Bitcoin as a savings account, right, to protect their wealth. But when it came time to actually buy something, to pay for goods and services, they were reaching for stablecoins, which are basically digital US dollars. And here it is, straight from the source. I mean, this is an incredibly direct admission from ARK's CEO. Cathie Wood is basically saying, hey, our entire valuation model had to change. Not because they were wrong about crypto's potential, but because stablecoins just did the job of everyday money way better than anyone expected. And this chart, wow, this just shows you the sheer scale of that takeover. Just look at that bar on the left. This isn't some small niche trend we're talking about. By 2024, stablecoins were already processing more value than a global giant like Visa. They've essentially built a brand new parallel financial system that's already bigger than the old one. And the efficiency of this new system is just mind-boggling. Get this. In 2024, Tether, the biggest stablecoin issuer, pulled in roughly the same net profit as MasterCard. But, and this is the kicker, they did it with fewer than 200 employees. MasterCard has around 35,000. That's not just an improvement, it's a complete reimagining of what a global financial company even looks like. So, what does this all mean for Bitcoin? If it's not going to be our everyday coffee money, then what is its new job? Well, this is leading to what's being called the Great Bifurcation. The whole ecosystem is splitting into two very specialized roles. On one side, you have Bitcoin solidifying its place as digital gold. It's the long-term store value, the strategic asset you hoard, kind of like a gold bar in a vault. And on the other side, you've got stablecoins, which have become digital cash, the stuff that moves, that you use for payments, for commerce. Okay, so if stablecoins have the dollar-based payment thing locked down, what happens next? Well, a whole new and really fascinating battle opens up. The fight is now over who becomes the best crypto-native digital cash, the payment system for when you're not using digital dollars. And right now, the two main contenders are Bitcoin's Lightning Network and Litecoin. Lightning is super high-tech, it's instant, but it's also pretty complex for the average user, so it's becoming the tool of choice for big institutional players. Litecoin, on the other hand, often called digital silver, is simple, it's reliable. It's that familiar send-to-an-address model that just works, making it perfect for everyday retail. And you can see this happening in the real world right now. The Steak and Shake story is a perfect example. They adopted the Lightning Network and saw incredible results. They cut their payment fees in half, and thanks to the massive support from the Bitcoin community, they got a 15% bump in sales. That's huge. But this quote, this is what really tells the story. At one point, Steak and Shake thought about adding Ethereum payments, but the backlash from the Bitcoin community was so intense that they actually came out and publicly declared their loyalty. It's a powerful reminder that this payment war isn't just about tech, it's about ideology and the power of a deeply passionate user base. But of course, none of this is happening in a bubble, right? There's this giant elephant in the room shaping the entire landscape, government regulation. And it pretty much all boils down to one word: taxes. So, under current US law, using something like Bitcoin for a tiny purchase is a complete compliance headache. I mean, seriously, buying a single cup of coffee is technically a taxable event. You have to figure out if you had a capital gain or loss from when you bought the Bitcoin to when you spent it, and then report that. It makes everyday use a total non-starter for most people. Now, there is a pretty simple fix for this. It's called a de minimis tax exemption, and it would just make small transactions like that tax-free. But for whatever reason, that rule has been stuck in political limbo for years. And you know who benefits from that inaction? Stablecoins. Since their value doesn't really change, there's no capital gain, which means no tax headache. It's a huge structural advantage. So what do companies do? Well, they try to build their own way around the problem. Look at a company like Block. Their strategy is to create a closed-loop system, basically connecting their Cash App users directly with their Square merchants, creating a private financial road that bypasses all the old rails and all the messy problems that come with them. And all of these different threads, the role usurpation, the payment battles, the regulatory headaches, they all come together and point to the biggest shift of all, the one that really cements Bitcoin's new job description on the world stage, the geopolitical endgame. In 2025, the game completely changed. The US government itself began to officially treat Bitcoin not as currency to be spent, but as a strategic asset to be held, just like it holds gold. They started by moving seized Bitcoin into the treasury for permanent holding, and then even proposed buying more for a national reserve. And that one move, that validates the whole digital gold idea at the highest possible level. It kicks off a global game of chicken. Once the world's largest economy starts stockpiling Bitcoin as a strategic asset, every other central bank on the planet is forced to consider doing the same, just so they don't get left behind. So let's put it all together. Here is our new map. When it comes to valuation, Bitcoin is specializing as digital gold, because stablecoins won the payments race. For payments themselves, you have a split market, Lightning for the big guys, Litecoin for retail. Regulation continues to favor stablecoins by making everything else complicated. And finally, geopolitics has cemented Bitcoin's role as a national strategic asset. And that leaves us with one final and I think really important question for you to think about. The digital world is clearly splitting in two between assets you hold for the long term and assets you use to transact. So the question isn't just about what to invest in anymore. It's about understanding this new map and deciding, how are you going to use these powerful new tools?